America's economy in 2025 feels fragile. Major retail giants have shuttered hundreds of stores, and once booming shopping centers now stand empty. But while traditional businesses fade, agriculture is emerging as the new engine of growth. Farmland values across the U.S. have risen over 20% in the past 2 years, with investors pouring billions into crops, cattle, and renewable energy tied to agriculture. At a time when inflation eats away at savings and stock markets swing wildly, the soil itself has become the safest bet. Farmland isn't just land anymore, it's America's future wealth, stability, and survival. These are the 10 states you should buy a farmland right now. Number 10. Kentucky. Kentucky might not be the first state that comes to mind when people think of farmland investment, but that's exactly why it's such a hidden gem right now. Known for its rolling bluegrass pastures and horse farms, Kentucky offers some of the most reasonably priced agricultural land in the U.S. As of recent averages, farmland in Kentucky often trades between $4,500 and $6,000 per acre, which is far cheaper than states like Illinois, where prime acres can easily exceed $12,000. This price gap makes Kentucky a more approachable market for both new investors and small farmers who want to build long-term value. The state's agricultural output is surprisingly diverse. It isn't just about thoroughbred horses. Kentucky produces $5.6 billion annually in agricultural commodities. Cattle farming accounts for more than 1 million head of cattle across the state, while crops such as corn, soybeans, and tobacco remain dominant. A typical corn yield here hovers around 175 bushels per acre, while soybeans average 50 bushels per acre, generating steady returns for landowners who lease their fields. With global demand for both feed and biofuels on the rise, these numbers signal strong income potential. Another key factor that makes Kentucky attractive is its climate and geography. The state's rainfall averages 45 inches per year, providing natural irrigation without the costly infrastructure needed in drier states like Texas or Nebraska. This lowers input costs and improves profit margins for small-scale farms. Additionally, Kentucky's proximity to large logistics hubs like Louisville and Cincinnati ensures farmers can move goods quickly and cost-effectively, reducing transportation expenses compared to more remote states. What truly sets Kentucky apart is its affordability compared to neighbors. Tennessee and Ohio have seen land values spike by 20 to 30% in the past 5 years, while Kentucky remains relatively stable, giving investors room for appreciation. For anyone seeking fertile soil, reliable rainfall, and long-term value at a fair entry point, Kentucky farmland offers a balanced mix of opportunity and stability. Number 9. Illinois. Illinois is often considered the gold standard of American farmland, and for good reason. Located at the heart of the Corn Belt, the state's black soil is among the most fertile in the world. But that premium comes at a cost. Farmland here averages $11,000 to $15,000 per acre, with the highest quality ground even pushing above $17,000. While this is nearly 3 times the entry price of states like Kentucky, it's also land that consistently delivers strong yields. Corn averages 200 to 220 bushels per acre, while soybeans bring in 55 to 60 bushels per acre. At current market prices, roughly $4.80 per bushel for corn and $12.50 for soybeans, the returns per acre can be very attractive, especially when rented out under cash lease agreements averaging $270 to $300 per acre annually. Illinois agriculture generates more than $19 billion annually, making it one of the largest producers in the country. Investors here don't just buy soil, they're buying into a stable, time-tested market. Another advantage is infrastructure. Illinois is home to major grain elevators, the Illinois River, and direct access to the Mississippi, ensuring smooth export channels. With global demand for U.S. corn and soybeans only increasing, Illinois farmland is practically recession-resistant. Of course, there's a flip side. The high upfront cost means it's not the best entry point for beginners, and property taxes can climb above $35 per acre annually depending on the county. But for those seeking long-term wealth preservation, Illinois farmland acts like a blue-chip stock, expensive but reliable. Historically, farmland here has appreciated 5 to 6% annually over the past 2 decades, often outpacing inflation. In short, Illinois isn't cheap, but it's premium real estate for serious farmland investors. Number 8. South Dakota. South Dakota is one of the quiet rising stars in farmland investment. While it doesn't get the same attention as Iowa or Illinois, land here offers excellent value relative to its productivity. Average farmland prices hover around $3,500 to $6,000 per acre, with pasture land often available for under $2,000 per acre. That makes South Dakota one of the most affordable Corn Belt states, giving investors a chance to secure large tracts without breaking the bank. The productivity is equally impressive. Corn yields average around 165 to 175 bushels per acre, and soybeans typically deliver 45 to 50 bushels. While slightly below Illinois numbers, the much lower land cost offsets the difference, providing a strong return on investment. Cash rents here range between $175 to $225 per acre, meaning a buyer can generate steady income while land continues appreciating. South Dakota farmland values have doubled in the past 15 years, but remain far cheaper than neighboring Iowa, where prime land exceeds $12,000 per acre. Livestock is another major driver. The state has over 4 million head of cattle, ranking 7th nationally, and also supports hog and dairy operations. This diversification means income streams don't rely solely on crop markets. South Dakota also benefits from relatively low property taxes, averaging just $8 to $12 per acre, which boosts net profitability compared to higher tax states. The state's climate can be challenging, with colder winters and shorter growing seasons. But modern hybrids and crop technology have made yields increasingly stable. Plus, South Dakota sits directly on the grain transport routes of the upper Midwest, ensuring reliable export access. For investors seeking affordable entry and long-term upside, South Dakota farmland represents a rare combination of low cost and solid productivity. Number 7. Missouri. Missouri is a versatile farmland state that offers something for nearly every type of agricultural investor. With land prices averaging $3,800 to $5,500 per acre, Missouri remains accessible compared to high-cost neighbors like Illinois. Pasture land is even cheaper, averaging just $2,200 per acre, making it especially attractive for livestock operations. The state is a powerhouse in both crops and cattle. Corn yields average 170 to 180 bushels per acre, soybeans produce 50 bushels, and the state supports over 2 million head of cattle. Missouri consistently ranks among the top 5 U.S. states in cattle production, giving ranchers a steady income stream. A typical cash rent here runs between $150 and $200 per acre, providing investors with a reliable annual return. One of Missouri's biggest strengths is diversity. The northern part of the state is dominated by row crops, while central and southern regions focus on hay and cattle. This mix shields landowners from commodity-specific downturns. Missouri farmland has appreciated steadily, with average values rising 8 to 10% annually in recent years, yet it's still significantly cheaper than Iowa or Illinois. Another key advantage is location. Missouri sits in the middle of the country, with direct access to the Mississippi and Missouri rivers, giving farmers easy routes for exports. Transportation costs are often lower here compared to landlocked states, which adds to profitability. Property taxes are also friendly, averaging $7 to $10 per acre, keeping holding costs manageable. Of course, Missouri does come with risks. Weather can be unpredictable, with flooding in some river bottom areas and drought pressure in the south. But overall, Missouri offers a rare balance: affordable entry, high versatility, and a proven record of appreciation. For anyone seeking a diversified agricultural foothold, Missouri farmland delivers one of the best value propositions in the Midwest. Number 6. Oklahoma. Oklahoma is often overlooked in the farmland conversation, but it's quietly one of the most affordable and versatile agricultural states in the country. Farmland prices here average $2,500 to $4,000 per acre, with pasture land frequently selling for under $2,000 per acre. That makes Oklahoma a bargain compared to Kansas or Texas, where land values can easily double. For small and medium investors, the low entry cost means you can secure more acreage at once, diversifying your operations. Agriculture is the state's second-largest industry, generating more than $7 billion annually. Oklahoma is a powerhouse in wheat production, with over 6 million acres planted annually, yielding about 35 to 40 bushels per acre. Cattle are another cornerstone. Oklahoma ranks second in the U.S. for cattle and calves, with nearly 5 million head statewide. This makes it an excellent state for investors interested in ranching or mixed-crop livestock farming. Cash rent rates are modest, averaging $40 to $60 per acre for pasture land and $120 to $140 for cropland, but the relatively low purchase prices still make the returns attractive. Property taxes are investor-friendly too, averaging $8 to $12 per acre, keeping ongoing costs manageable. The climate is mixed. Northern areas enjoy fertile soils, while western Oklahoma can be more drought-prone. However, irrigation projects and drought-resistant hybrids are reducing risk. Another bonus is location. Oklahoma borders major transport routes, including rail lines and interstates connecting to Texas and Kansas, allowing easy grain and cattle distribution. For investors, Oklahoma represents a low-cost entry into the farmland market with diverse income streams. While it doesn't command the premium yields of Illinois, its affordability and cattle dominance make it a smart, long-term play. Number 5. Arkansas. Arkansas is a farmland state with a unique advantage. It's the rice capital of the United States. Nearly 50% of all U.S. rice comes from Arkansas, making it a powerhouse in a crop that is increasingly important globally. Farmland here is surprisingly affordable, averaging $3,000 to $5,000 per acre, with some Delta farmland priced even lower. This affordability makes Arkansas one of the best value markets in the South. In addition to rice, Arkansas produces soybeans, corn, and poultry. Soybean yields average 50 bushels per acre, while corn typically delivers 180 bushels. Poultry is another major player, generating over $3 billion annually. Altogether, Arkansas agriculture contributes more than $9 billion per year to the state economy. Cash rents are competitive, averaging $140 to $180 per acre, which provides steady income for landowners who lease to local farmers. The state also benefits from excellent water resources. The Mississippi River borders the east, while the Arkansas Delta region provides fertile, irrigated soils. This reduces input costs compared to states reliant on costly irrigation infrastructure. Property taxes are very favorable, averaging just $5 to $8 per acre, among the lowest in the nation. Of course, Arkansas farmland does face challenges. Heavy rainfall and flooding risks in the Delta can impact yields. However, crop insurance programs and strong export demand often balance out these risks. In fact, Arkansas rice exports alone exceed $1 billion annually, ensuring strong global demand for what farmers grow here. For investors seeking affordable farmland with a clear specialty crop advantage, Arkansas is hard to beat. Its combination of rice dominance, diverse output, and low land prices makes it one of the most strategic choices for 2025. Number 4. Texas. When it comes to sheer scale and diversity, no state can touch Texas in the farmland market. Texas has a staggering 127 million acres of farmland, accounting for more than 10% of all agricultural land in the U.S. That alone makes it a giant for investors. Land prices vary widely. Cropland averages $4,500 to $6,500 per acre. Ranch land in remote areas can dip below $2,000 per acre, while premium irrigated farmland near the Rio Grande Valley or Central Texas can exceed $10,000 per acre. This broad spectrum means investors at nearly every level, from small buyers to institutional funds, can find opportunities that fit their budget and goals. Texas is the #1 cattle-producing state, home to more than 12 million head, generating an estimated $10.5 billion annually in beef revenue. It also leads in cotton production, with 6 million acres planted yearly, averaging 800 to 900 pounds per acre, making it one of the top global cotton hubs. Corn and sorghum further diversify the portfolio, yielding 150 to 170 bushels per acre in many regions. This mix ensures Texas farmland isn't reliant on a single crop or product, offering multiple income streams. Rental income also reflects this diversity. Cropland cash rents average $200 to $250 per acre, while pastureland rents range between $30 and $50 per acre. Property taxes are higher than in some states, often $15 to $25 per acre. But Texas provides significant agricultural exemptions that can reduce effective tax rates by more than half, preserving profitability. Texas's global advantage lies in its logistics. With massive ports in Houston, Galveston, and Corpus Christi, the state has direct export routes for grain, beef, and cotton, cutting down on transportation costs that eat into profits elsewhere. Add in its rail and interstate infrastructure, and Texas farmland becomes a gateway to world markets. Of course, risks exist. West Texas struggles with drought, while Gulf Coast regions face hurricane exposure. Yet irrigation systems, crop insurance, and diversified agriculture help offset these vulnerabilities. What makes Texas truly stand out is its combination of scale, affordability, and export access. For investors who want both growth potential and diversification, Texas farmland is more than an opportunity. It's an empire in the making. Number 3. Kansas. Kansas is the classic image of American farmland: endless plains, golden wheat fields, and skies that stretch forever. Known as the wheat state, Kansas produces nearly 20% of the nation's wheat, with over 7 million acres planted annually. Wheat yields average 40 to 50 bushels per acre, and with current prices hovering near $6.40 per bushel, returns remain steady. Farmland prices in Kansas average $3,000 to $5,000 per acre, with some high-quality irrigated tracts reaching $7,500. Compared to neighboring Colorado and Oklahoma, Kansas still offers strong value for row crop investors. The state isn't just about wheat. Corn is widely grown, yielding around 150 to 170 bushels per acre, while soybeans average 45 bushels. Sorghum is another important crop, thriving in Kansas's drier western regions. Livestock is also huge here. More than 6 million cattle are raised annually, generating billions in beef production. This mix of row crops and ranching provides income diversity that keeps Kansas farmland resilient against market swings. Cash rents average $120 to $160 per acre, and property taxes are fairly modest at around $8 to $12 per acre. Investors also benefit from Kansas's central location. The state's grain is easily shipped via rail and road to export hubs along the Gulf of Mexico, reducing transportation costs compared to more isolated states. Of course, Kansas does face weather challenges. Drought can be an issue in western counties, while storms and hail sometimes damage crops. Yet crop insurance programs and irrigation in high-value areas keep farmers protected. Land appreciation here has been strong too, with values rising 6 to 8% annually over the past decade. For investors seeking affordable entry into a state with proven crop diversity and long-term stability, Kansas farmland is an excellent choice. Number 2. Nebraska. Nebraska is a powerhouse when it comes to farmland investment, thanks to its rich soils and irrigation advantages. Average cropland prices range from $4,000 to $7,000 per acre, while prime irrigated acres in eastern Nebraska can reach $10,000 or more. Pastureland remains affordable at $1,800 to $2,500 per acre, making Nebraska appealing to both crop farmers and ranchers. Corn is king here, with yields averaging 190 to 200 bushels per acre, well above national averages. Soybeans produce 55 bushels per acre, while cattle production tops 6.5 million head annually. Agriculture in Nebraska contributes more than $25 billion per year to the state economy, making it one of the most farm-dependent states in America. Cash rents average $230 to $270 per acre, providing landowners with consistent returns. A huge advantage Nebraska offers is the Ogallala Aquifer, one of the world's largest underground water reserves. This gives irrigated farmland a major edge, reducing the risks of drought that plague neighboring states like Kansas. Reliable irrigation helps stabilize yields, ensuring steady income for both farmers and investors. Taxes are higher here, averaging $25 to $35 per acre, but the consistent yields and rental income offset the cost. Nebraska's central location also ensures efficient transportation, with major rail lines and grain elevators connecting directly to U.S. export hubs. One drawback is volatility in farmland prices. Nebraska saw land values rise 15% year over year in 2022, showing how competitive the market can get. Yet this also highlights investor demand. With high yields, irrigation security, and strong global demand for corn and beef, Nebraska remains one of the most secure and profitable farmland investments in the country. Number 1. Iowa. When it comes to farmland, Iowa is simply unmatched. The state is home to some of the most productive soil on the planet. Deep black loam that makes Iowa farmland the crown jewel of American agriculture. Prices reflect this prestige. Average farmland sells for $11,500 to $15,000 per acre, with top-tier acres in central Iowa exceeding $20,000 per acre. While expensive, these lands consistently generate returns that justify the premium. Corn and soybeans dominate, with average yields of 205 to 215 bushels of corn per acre and 60 bushels of soybeans. At current commodity prices, this translates into thousands of dollars in gross revenue per acre annually. Cash rents are equally strong, averaging $280 to $320 per acre, providing landowners with some of the most reliable rental incomes in the U.S. Iowa is also the nation's top ethanol producer, with nearly 40% of its corn going toward ethanol production. This creates steady demand regardless of export markets. The state supports over 24 million hogs, making it the #1 pork producer in the country, while cattle and dairy also contribute billions. Altogether, Iowa's agriculture generates more than $35 billion annually, cementing its dominance in the farm economy. Taxes are moderate, averaging $20 to $25 per acre, and strong infrastructure ensures efficient shipping. With access to the Mississippi River and major rail networks, Iowa farmers can move grain quickly to domestic and international markets. The main drawback is cost. Entry into Iowa farmland is expensive, often pricing out small investors. But for those who can afford it, the stability is unrivaled. Historically, Iowa farmland has appreciated 5 to 7% annually, often outperforming other asset classes. In simple terms, Iowa isn't just farmland, it's the blue-chip stock of American agriculture.